Bitcoin and the crypto market are lining up for their biggest move, for the biggest breakout of the year. And this could all likely happen in the next 45 days. So if you're still seeing red or feeling nervous or feel like quitting, it's definitely not a time to quit. It's definitely a time to stay plugged in and focused, because this is exactly where the next wave and pump up is starting. And here's what's at stake right now. Washington is sprinting to rewrite the crypto playbook with new rules, new leadership, and a real push to bring Wall Street on chain. Institutions are also quietly building huge positions in Bitcoin, Ethereum, and Solana, all while the regular investor, the 99% of everyone, is still in the dark and still hesitating, wondering if this is something they should do, they should invest into, or what's the deal? All while there are massive amounts of stablecoins and ETF flows are stacking up, all pointing to a September trigger that could kick off a historic rally. Today, we're breaking down all of the data, the policy shifts, and the exact moment insiders who know and what they're watching, so you can position yourself ahead of everyone else, ahead of the move that's coming. That way you can capitalize on it. So, all right, let's get into it, guys. So first off, right now, a new regulatory era is rolling out in America. The CFTC has launched a crypto sprint in partnership with the SEC, putting President Trump's latest digital asset executive order into action. And acting chair Caroline, I think you say it Pham, or Pam, says the CFTC is working closely with the SEC's top officials on what's now called Project Crypto. And the focus is this: publish clear guidelines on what counts as a cryptocurrency commodity, spell out how registration works for decentralized finance, and update the rulebook for blockchain-based derivatives. Trump's crypto task force delivered 18 official recommendations, including a joint rulemaking with the SEC and a new regulatory sandbox for the entire industry. One of the biggest ideas is giving the CFTC direct authority over all spot trading and non-security digital assets, covering Bitcoin, of course, Ethereum, and more. Lawmakers are also considering new rules that would let financial firms offer multiple crypto services in a single user dashboard. Big names are stepping into leadership roles. President Trump has nominated Brian Quintez, the global head of policy at Andreessen Horowitz crypto venture arm, A16Z crypto, of course, to lead the CFTC. Can you imagine how huge this is? Bringing someone from the world's most powerful crypto investment firm directly into US regulatory leadership sends a very clear message. There's deep alignment now between Washington and the digital asset industry. Washington has seen major shakeups. Federal Reserve Governor Adriana Kugler resigned suddenly this week too. In the world of central banking, when something like this happens, it usually signals disagreement in terms of where the policy is headed, because they're talking about it behind the scenes. At the same time, President Trump fired Erica let me see if I can say her name right, McIntyre, I think is how you say it. She's commissioner of the Labor Statistics Department. And he apparently accused the bureau, her bureau, of manipulating jobs data. According to Trump's team, the jobs numbers didn't reflect what was really going on in the economy. I've known for a while there was manipulation. I used to say it in my earlier videos too, so this doesn't personally surprise me. Anyway, this has had an effect, and it's rattled trust in government data across the board. So I'm pretty sure all departments are under audit right now, but that's not official. That's just coming from my own hunch. Meanwhile, the CFTC is clearing out old, outdated guidance and consulting with crypto executives about new products, including 24/7 trading and perpetuals contracts. These steps show regulators are building a new playbook for modern digital markets. The US is on the verge of opening the floodgates for banks, ETFs, and Wall Street to enter crypto in ways we've never seen before. So while the headlines have been focusing on price drops and social media warns of crashes, institutions and major players have been quietly moving mountains of capital into crypto. In July alone, for instance, BlackRock's iShares Ethereum ETF brought in $7 billion of inflows. Across all spot Ethereum ETFs, on-chain holdings jumped over 40% in just 1 month. And on the whale side of things, one address recently bought nearly $300 million worth of ETH through Galaxy Digital's OTC desk and now holds over 79,000 ETH, one of the largest single accumulations of this entire year. The mega club is growing. More than 200 Ethereum addresses now each hold over 10,000 Ethereum, a surge tracked by Glassnode. These wallets include balances from exchanges, custodians, and institutional products, showing that major buyers are loading up as prices bounce from the recent lows. Meanwhile, SharpLink Gaming added another 53.5 million in ETH, joining the trend of traditional companies shifting significant capital onto the blockchain. Big financial firms are making bold moves. Deutsche Bank, for instance, just launched a euro-backed stablecoin on Ethereum, opening up a new wave of institutional on-chain activity. And Binance recently sent 8,000 ETH to Wintermute, a top market maker, highlighting how over-the-counter deals are fueling accumulation. And on the Bitcoin forefront of things, Metaplanet, Tokyo-listed treasury firm, has become one of the world's most aggressive corporate Bitcoin buyers. In just the last 5 months, they've acquired 17,595 Bitcoin, spending around $1.78 billion. And their most recent purchase was for 463 Bitcoin for $53.7 million, funded through their perpetual preferred shares. The company's CEO says their mission is to grow their Bitcoin per share and maximize long-term shareholder value. And on the Solana side of things, institutional interest is ramping up. The first US Solana staking ETF, known as SSK, hit 143.7 million in assets under management during its first month, too. Meanwhile, Solana's network activity broke records in July, with more than 3.5 billion transactions, showing that on-chain demand is hitting new highs. And all across the blockchain, receipts tell the story. OTC desks are moving hundreds of millions, whale wallets are stacking, and ETFs are quietly hoarding coins during the dip. Institutions are making their move sizably, and they're doing it while real investors are still debating whether to jump in or sit out. But while smart money is quietly building positions in crypto, the bigger picture in global finance is shifting fast. Right as these accumulation trends take off, the traditional markets are facing one of their most turbulent moments in years. Last Friday, the US stock market lost $1.1 trillion in value in a single trading session. Major tech companies like Nvidia, Amazon, Apple, Microsoft, and Meta all saw sharp declines, making this one of the most severe one-day losses in recent history. That sudden shock rippled through every part of the market. As you can imagine, stocks dropped, spot Bitcoin ETFs recorded a net outflow of 643 million, breaking a 7-week streak of inflows. Meanwhile, spot Ethereum ETFs brought in 154 million and have now attracted new money for 12 weeks straight. So you can feel there's a shift starting in how investors are looking at Ethereum. The way money is moving between different ETH products says a lot about where people see the next opportunity coming from. And the wave of uncertainty grew even larger as new policy headlines broke. Polymarket, for instance, the predictions market, it's currently giving a 71% probability that the Fed Reserve will cut rates by 25 basis points in September. This has a lot to do with what I was mentioning earlier about the sudden resignation of Fed Governor Adriana Kugler and the firing of the Commissioner of Labor Statistics, both of which are making investors questioning what's coming next from the central bank. And at the same time, activity on the blockchain is sending a very different signal. Over 12 billion in new stablecoin supply has entered crypto in the last 30 days, and trading volume on exchanges has reached 1.77 trillion in July, the highest since February. This surge in capital and activity is happening as traditional assets face heavy volatility. So on top of everything coming in the markets, the headlines just keep coming. One of President Trump's top aides recently called out India for financing Russia's war, right after India doubled down on plans to buy Russian oil, even with all the pressure from the US. And if you've caught some of the latest news, there's even been talk about nuclear tension with Russia. It's wild. And stories like this always add another layer of uncertainty and volatility to the mix. So if you've been wondering why the market has been turbulent and a little down, well, this is why. So for now, I'm keeping a close eye on how all of this will unfold. And this is what I'll be sharing with you in all of my videos Monday through Friday. So now let's shift gears a little bit. Let's shift away from the headlines and look at what's actually happening on chain. Even after the recent pullback, on-chain demand for Bitcoin and Ethereum is apparently showing major strength nevertheless. Over the last 30 days, apparent demand for Bitcoin remains positive, with around 160,000 Bitcoin accumulated. These numbers track coins flowing into wallets that haven't moved their Bitcoin in over a year, which shows deep conviction from holders. And another key signal, accumulator addresses. These are wallets that keep stacking Bitcoin and never sell. In just the past month, for instance, these addresses have added about 50,000 Bitcoin, evidence that some of the smartest, most patient players in crypto are still in buying mode. And we see that the supply of Bitcoin held by OTC desks has also dropped sharply too. Back in September of 2021, OTC desks had about 550,000 Bitcoin available for deals. Today, that number is just 145,000 Bitcoin. The shrinking supply is a classic early signal setup that we could be heading for another supply squeeze, which I believe we are, as the demand ramps up. Ethereum's on-chain story is also picking up speed. In the past 24 hours, nearly 1 billion in stablecoins has flowed into Ethereum. That's usually a sign that new capital is getting ready to enter into DeFi, buy tokens, or fuel new ecosystem activity. Alongside all of this, more than 200 addresses now hold about 10,000 Ethereum each, which reflects the continued buildup of large holders on the network. So along with all of this growing network of heavyweight holders and the steady stream of new capital moving on chain, the technical picture is starting to shift. Technical setups are flashing. Ethereum's chart right now looks a lot like Bitcoin's did before its giant move in 2021. We're seeing 3 taps on the RSI, a falling wedge breakout, and early signs of momentum flipping. When this happened to Bitcoin last cycle, the price went vertical. Now, Ethereum's lining up with the same setup. We're seeing momentum build for Ethereum, and the story of rapid growth does not stop here. Over on Solana, the on-chain activity is breaking new ground as well. The network hit over 3.5 billion transactions in July, and apps like BankFun have kept more than 80% market share in daily launchpad volume for almost 2 weeks straight. The Bonk community has burned over 11 trillion tokens so far, more than 11% of the initial supply, worth about 300 million at today's prices. And if you've been tuning into my videos for some time, you know we've been tracking Solana and Bonk for a while now, and these two keep proving they're worth watching. The Bonk Fun ecosystem is picking up serious momentum. So if you want a deep dive on the best opportunities that are going on right now, they may be super high risk, which I will tell you, but if you want to know what is the top alpha right now, Just let me know in the comments below and let me know which token you're watching and maybe I'll cover it. But anyway, back to what we're talking about, because if you zoom out, the story is very clear. On-chain demand is holding on strong and long-term holders are stacking, all while new capital is waiting in stablecoins for the next big move. So the activity under the surface right now, if we just look a little deeper, it's being set up for something much bigger than what the headlines in the news and the media suggest. Now let's talk about some shakeouts, possible regrets, and the Millionaire Playbook. Because every cycle, crypto hands out its biggest rewards during the moments of highest fear and doubt. Buying when things look easy is simple, but real conviction comes from holding strong or even stepping in when everyone else is convinced the game is over. If you look back at the last Bitcoin bull run, there were even 7 major corrections along the way. Some drops went as far as 51% each time. And the crowd, everyone, the majority of everyone thought the top was in, that it was over. And those shakeouts ended up being opportunities in disguise for anyone patient enough to stick around that understood Bitcoin's fundamental value. And you want to hear something that's really, really trippy? Is that even if you only bought Bitcoin at the very top of every last past cycle and just held it, you'd still be up over 400% right now. That's the power of playing the long game in crypto. Many legends in this space actually always say, just keep stacking and don't get shaken out. Because right now, on-chain data shows demand is still strong, even after the most recent dip. And over the past 30 days, Bitcoin's addresses have only ever accumulated and never sold, adding around 50,000 Bitcoin. OTC Desk's supply has dropped to its lowest level in years, setting up a classic crunch scenario, as I was telling you, because there's simply not enough Bitcoin in circulation on exchanges on these OTC desks available for people to buy and trade. Why? Because these holders I'm telling you about that have added 50,000 in the last 30 days, they're not interested in putting their Bitcoin on an exchange or available to be traded. They're keeping it in private wallets, in storage, because they know how valuable it is and they're just gonna hold. So it tells you how valuable Bitcoin is. And here's one of the best explanations out there on why patience and conviction win in this game.
Before we go, Bitcoin was under 8,000 earlier today.
Buy it.
Regardless though of the drop. If I said to you Bitcoin dropped to 5,000, you'd say buy it.
Buy it. Because here's the thing, the daily price of Bitcoin doesn't matter. It's been alive for 10 years. In every year, other than 2015, it's made a higher low. The market cap has grown every single year. Every fundamental indicator of Bitcoin, usage, wallets, block size, transaction size, number of transactions, every single one, hash rate, making new highs. All of the indicators of the network and the network value are rising. The price of any asset fluctuates. Let's take Amazon. Amazon has been a public company for 20 years. In every year, including this year, it's at a double-digit drawdown. The average peak to trough, minus 31%. Twice, minus 90%. When was the right time to sell? Never. Who's owned it since the IPO to today? Jeff and his mom and dad. That's it.
All right. We're going to leave it there, Mark.
All right.
Good to see you.
Thanks
Thank
for
you,
having me.
Mark Yusko, Morgan Creek Capital.
Outcast.
Every cycle creates regret for the people who let go too soon, and millionaire stories for those who held on through the chaos, through the storm. The next chapter is being written right now. So in today's video, we covered a lot of information, I know, but the big key takeaway is simple. The takeaway, all I want you to remember today is that the pump, okay, that we've all been waiting for the crypto market to pump, it's already set up. We're seeing regulators, institutions, and even the world's biggest tech companies all preparing for a future that's more digital, more on-chain, and more global than ever before. Every data point, every move by smart money, which means just smart investors, and every signal from the policy world points to one thing. Crypto is moving into its next era, and the doors are wide open for those who see it early. The same shakeouts and uncertainty that make headlines now are the same signals that have marked every breakout moment in this space. So if you're here, you're informed and you're ahead of the curve, you're ahead of everyone else. So all you have to do now is just keep doing what you're doing. Now is the time to keep your eyes open, to stay flexible, to keep learning. And if you think we've reached the top, you need to watch this video here. So if you found this video here today valuable, just like and subscribe and share the video with a friend or family member that needs to hear this. And drop your comments or questions or any token you want me to cover in the comments section below, and we'll read it and I'll get back to you. And maybe we'll make a video over it. Anyway, I love you guys very much. Happy Monday once again. And I'll see you guys in my video tomorrow.